Hello everyone, welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'll be presenting for AvaTrade. As we get going, let's do a quick systems check and just make sure that you're hearing me clearly and seeing my screen all right. Type OK in the chat box if all is okay. Hello Natalie, welcome. Just waiting on a few more responses to make sure everyone's up and running okay. All right, looks like we're just fine. If anyone has any issues as we go along, just let me know. Two pretty big stories going on for the fundamental news. We'll take a look at that. And then we'll get on the charts and see how that's driving the movements and look for some potential entry points. As always, keep in mind that no one trade is guaranteed to bring profits. I think we all understand that we should manage our risk in one way or another, whether you're using stop losses or hedge positions, or maybe you're using AvaProtect. If you're using the Web Trader platform or AvaTrade Go app, AvaProtect is a nice feature to protect against losses as well for defined periods of time. But in some way, you should be managing your risk. And obviously, each and every trade does have the potential for profits, which is why we're all here. But you want to manage the risk on the downside because any one trade obviously could lose. As we move forward, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, in general, what is fundamental analysis? For those of you who are new to trading, it might be helpful to go over these basics. We won't take too long on it. Fundamental analysis basically is looking at the news, looking at what's happening around the world, and trying to decide how that might affect the price movements of different instruments that you're trading on. Fundamental analysis can look at regular economic events, things like factory production numbers, unemployment figures that come out. Those types of economic data points are scheduled. We know when they'll be announced, for what country they'll be announced, what currency or instrument the numbers will affect the most, whether it's the numbers that come out each week regarding oil reserves or whatever the case may be. Those types of announcements are easy to plan for in terms of timing and the asset or instrument that they will affect most directly. The other type of fundamental news, maybe a little harder to plan for in terms of timing, is what we call extraordinary economic events. These would be an event like the vaccines being announced as ready for distribution. Nobody knew when that headline was going to come. It could be a headline about Brexit or a headline about the virus spreading. Whatever it is, that type of unexpected headline that can move the markets, that's what we refer to as extraordinary type of fundamental news. Now, although you cannot plan for the timing of it exactly or the scope of it, you still can be ready within your trading plan with pending orders in case those types of headlines come out. So your buy stop, your sell stop pending orders can just be waiting for breakthrough moves from a headline that you didn't know when it would come, but you knew it might come at some point. Today's a good day, as an example, with oil. I think we all expected eventually a big movement with oil, with a decision about whether or not oil production would be increased or not with the OPEC plus nations. And the decision was made today. So we saw oil shoot up. And if you just had a pending order, as we'll look at on the charts, waiting for that decision, that potential decision, you could have had a huge payout on oil. And the same is true with other assets as well. So as we go along, if you have any questions, please feel free to chime in the chat box, ask questions, give input. I encourage you to do so. Now, as we move forward, let's take a look first from the AvaTrade website, where you can find the AvaProtect feature that I mentioned for your risk management. So one location would be if you go to our trading platforms and you take a look at AvaTrade Go, you'll see that AvaTrade Go offers AvaProtect in the order window. Okay, and that's, you pick the length of time you want the protection. It shows you the cost of the protection for that defined time period, and any profits are yours with that protection. Any losses are added back. If the losses are during the covered time period, they're added back to your account. So and the trade can keep running after that. You can set a stop loss or something else. So other features in the app are also very convenient, and I'll show you when it comes to take profit, stop loss. It's the same if you log in and trade on our web trader platform as you have in the AvaTrade Go mobile app. So when you log in from our main website, the web trader platform, which is what you're looking at here, trades on top of the MT4 and MT5 accounts. And when you set up a trade with this particular platform, you'll see that AvaProtect is there, okay, just like through the mobile app. So on gold, silver, and FX pairings, you'll see AvaProtect as an option. And you might be setting up your trade, whatever it might be. Maybe you think you want to do 15 ounces on gold, 0.15, and you see it tells you the margin requirement, 146 in your account currency, by the way, and it tells you the value of the total size of the position. Obviously, the margin is the size of the position divided by your leverage, gives you how much margin is required to open the trade. Now, starting out, maybe you decide you want to do a take profit at, I don't know, 1850. Maybe you think gold's going to plunge. And I'm not saying I think gold's going to plunge, but if you did, look at the possible payout. If it drops, about $100 per ounce, $1,500 payout. And maybe you say, okay, I think it'll drop to 1850 before it goes up above 2000. So maybe you put your stop loss at 2005. And your risk, 825 in your account currency calculated compared to possible profit. Now, I might look at my account and say, wow, that's too high of a percentage of my account. You only have about 2,000 in the account, and I'm risking, over 800. And so if I don't like that risk, then I can just lower my trade size. Now I'm down to 10 ounces. So now I'm risking about a quarter of my account. If I'm okay with that, to make about 10% profit, risking 5%, whatever the case may be. So the order window here acts as a trade calculator so that you know your exposure and your potential profit to your take profit and stop loss. Maybe you say, you know what, I think temporarily gold could spike either direction. And so maybe I'm more comfortable, rather than doing a stop loss right now, maybe I say for the next hour or 3 hours or 6 hours, or let's say 2 days, I want AvaProtect maybe instead of putting a stop loss right now. So, or in addition to a stop loss. So now for 139, I can go after my profit over the next 2 days, and I know my cost for my risk is only $139. When this expiration comes, this time that's listed here, time and day, any negative floating would be added back to my account. Then I could add a stop loss. So it's a unique feature for managing risk, depending on the circumstance. On a day like today, where maybe there's big volatility because of some of the fundamental news I'm about to show you, it could be something that interests you. Now, because we're talking about fundamental news, I want to show you that on all live accounts, this platform, which trades on top of your MT4 and MT5 accounts, this platform has the economic calendar, which obviously shows you fundamental news. It also has analyst views. Now, this is technical analysis. These are signals. So you have free signals through the web trader platform with all live accounts. It breaks down the technical movement, what what direction it's expected to go, entry points, exit points, everything's here for the signals for you. But what I wanted to show you is the fundamental news that you can get from the market buzz on Trading Central. And you point at the bubble, you see how many stories are out about that particular asset. Microsoft 108, maybe you're interested in trading on some stocks. So you click on it and you see, let's see what's happening with Microsoft. And you'll see some articles that mention Microsoft that could affect Microsoft's value. And so talking about Russian hackers, it gets into Microsoft and how it affects them. And so as you read the fundamental news for any particular asset or instrument that you want to trade on, you can find the fundamental news quickly. Okay, articles on the instruments you're interested in trading on. It comes up right away. It's a time saver, if nothing else, to find your fundamental news. Now, I've gone ahead and pulled up some big articles that I've found, and we'll see crude oil. Why did crude oil go up? Russia reportedly abandons their push for a February output hike. So Russia's been itching to increase production of oil so they can try and sell more of it on the open market, but that obviously then drives prices down. And so OPEC and what they call the OPEC plus nations, which includes Russia and some others that produce oil, have all agreed now, it seems, to continue their production cuts, to not increase production. And since that news broke today, with Russia specifically abandoning their push to increase output, oil prices spiked up quite a bit. And we'll take a look at that. Hello, Natalie, from Russia. So it's your country largely that drove oil prices up today, which is maybe a good thing because they're cooperating with the rest of the OPEC nations to try and stabilize oil prices and keep them from falling through this pandemic. Now, as we look at what the Saudis are talking about as well. The Saudis have actually offered additional output cut. Okay, this is a headline breaking as well. That increases the bullishness on oil as well. So we've got Russia chiming in not to increase production. We've got the Saudis talking about extra oil output cuts. So there went oil prices up. Creates a lot of bullishness for oil prices as less concern about an oversupply of oil with these two headlines. This is going on in the US. I mentioned there are two main storylines. The first storyline is about oil and those headlines we just looked at. And the second big storyline is what's going on. And when they say Georgians, they don't mean the country. In this headline, we're talking about the state of Georgia in the United States. There's two Senate elections occurring today. And yeah, there was a meeting today, correct, Natalie, for the OPEC plus. And so in the US, in the state of Georgia, there are two Senate runoffs. The reason they call it a runoff election is nobody got a strong enough majority during the regular election to win the seats. Although the Republican candidates both were ahead, they weren't ahead by enough. And now only the top candidates are able to be in the runoff election. So it's just the Republican and the Democrat in each of the runoff elections now for two different Senate seats. And a lot is riding on this. You see the markets are optimistic about what's happening. A lot of green here, but the markets actually today have been choppy. Green and red, and now they're green again. Volatility was up, now it's back down. And so this has been the case through the day, a lot of choppy trading, which we'll take a look at the charts and see how you could have taken advantage of that and how you still can. But this is big news coming through, probably because of all the mail-in voting again in the US. It's going to be a little messy trying to count all the votes and get the results just like the presidential election was. And so hang on for some fireworks probably over the next couple days with counting votes and protests about votes and everything else, just like the presidential election. So there could be quite a bit of volatility, just as we saw today with the markets bouncing up and down. You know, the reaction to who wins really is in the eye of the beholder as to what you think will happen. You know, the Republicans would maintain tax cuts on the corporations, the Trump tax cuts. The Democrats are expected to raise taxes back up on corporations. So if the Democrats win both of those seats, that could be a negative for Wall Street. If the Republicans win at least one of those seats and maintain control of the Senate, they could at least obstruct some of what the Democrats might try to do in the ways of raising taxes on corporations. But the markets might view Democrats winning as positive as well, because they tend to like to hand out a lot of stimulus money. They're very big on handing out dollars. So it'll be interesting to see how it plays out. I think we need to have some pending orders ready, buy stops, sell stops on some important assets, so that however the market reads it, you can get in on any major movements as the election results come in. We see positive news out of the US factory activity near 2.5-year high. So even through the COVID crisis, US economy is still trying to roar. We've got, you know, indices not that long ago reached all-time highs again, right through this COVID situation. And so US factory activity hitting a 2-year high. There are some worries about supply chains because of the continued outbreak of this pandemic. Looking at other numbers that came in on the economic schedule, remember I said there are two types of fundamental news. Natalie, there's been more talk today, though, about that OPEC. I know the OPEC meetings tend to carry on more than just 24 hours, and the talk definitely tends to carry on longer than just the day or two that they meet. And so there's more news leaking out today, is what we were looking at in that headline. Okay, so as we look at some of the fundamental news that was scheduled, the regular economic schedule, as we call it, we can see some good news came in. German retail sales month to month went up. They were expected to drop and they went up. German retail sales year over year were expected to rise, but they rose a lot more than expectation. So that's good news for the euro in general, the strength of the euro against other pairings. We see German unemployment change. Unemployment went down more than expected. It was expected to go up and it went down. So good news out of the European Union with those numbers. Another better than expected number here on money supply. As we look in the US, we also see good numbers. Manufacturing, we just saw that headline, 2.5-year high. So very good numbers for manufacturing out of the US. And that takes us then to the charts. We see some positive momentum. We see the markets were turned green again as we looked at the futures, and the market opened green as well. And so let's have a look. We'll take a look at maybe oil first. And we see here's the spike on the 1-hour candles. Oil certainly went up quite a bit. And let me just get rid of this. And we'll draw a new line. This was our spike on oil today. And we see it's still looking quite bullish. We can look and say, okay, where might this stop? We go to the 1-hour candles, to the 1-day candles, the 1-week candles. Yeah, listen, the commodities that are paired against the USD are having an easier time rising against a weak USD. Correct, Daniel? Gold has been reaching all-time highs along with the NASDAQ. Both are paired against the USD, right? A weak USD. Gold rises anytime there's large fears of inflation. And when there's stimulus in the trillions of dollars worth of stimulus being handed out, like in the US, that certainly causes inflation. And so as an inflationary safe haven, gold has been rising. The markets have been rising because they love free money, right? So stimulus made the indices go up. Well, that same stimulus also creates fears of inflation. And so gold has been flying up as well, okay? And so Oil didn't go up today just because the USD is weak. It helped it rise, right? The US dollar being weak, but oil went up not just from a weak US dollar, but because of the talk from OPEC and Russia about not increasing production. And so that certainly played a large role in oil's spike today. So now we look at oil and we say, what does it look like in the bigger picture? And you see these red lines I drew here, these two red lines, those were resistance levels. That was a major support level back here, and I could get rid of this second line. This was a major support level here, this red line, okay? Support up, support up, support up, support up, and then this was the plunge of oil at the beginning of the pandemic, when oil went down to zero on some of the futures contracts, and then oil's back up. And now it finally broke above that support level, which was resistance. Once it was broken here, it becomes resistance. Now it's above that price. So in the bigger picture, we crossed a threshold that was pretty important with oil. We've gotten pre-pandemic, we've gotten pre-oil plunge. And so the next major resistance level on oil is up here. We're talking around, on the one-day candles I see here. This was a resistance and a plunge here. So somewhere up around 59, near 60 is the next major resistance level. Now, I don't know that we fly up to that price level anytime soon, but that's the next major resistance level up there. Now we go back and we say, let's look at the small candles then. That was a huge plunge upward, right? A huge climb, I guess I should say, instead of plunge. So any pullbacks could be an opportunistic spot for a buy position if you believe this momentum can continue with oil. So as we look at oil, we can say if oil pulls back to this resistance level here where it plunged down earlier in the week. So we see resistance and a drop, right? So now it's past that resistance. So if it pulls back to that price, that could act as support. So we're looking at 49.8, right? We just broke above 50. So if we come back to 49.8, that should be support. So you have a couple options. You can buy on oil now, right? And put your stop loss below that support level, or you could wait for an opportunistic pullback to try and take a shot on oil. Okay. Now, if you believe just that oil shouldn't be this high and it might plunge, then certainly you can take a sell, right? I'm not telling you you shouldn't, but the fundamental news is driving oil up. To try and sell when the fundamental news says buy on oil, that might be a hard thing to do. Oil might have a hard time dropping on a sell position. Now, an opportunistic spot would be a pullback. So around 49.8, something like that. So how do you do a pending order? You just switch from market to pending. What kind of pending order buys from a lower point? That would be a buy limit, right? Buy stop buys from a higher point. And so I could program this at 49.8, right? To buy. And my stop loss, I could put down below this support level, which would be what, 49.6. Not having to risk much. And there we are. So if I get a favorable pullback, I can get in on a buy. Now, if it does break the support and breaks below 50, breaks below my stop loss here, then maybe I decide I want to get in on a sell position because maybe the market swung with this election. Maybe there's really bad news for oil and you'd want to sell. I don't think the news is changing anytime soon on the fact that the oil producing nations are not going to increase production. So I don't even like the idea of preparing a sell stop in this situation. But the buy limit seems to make sense if you get an opportunistic pullback with oil. If we take a look then at maybe some of the major indices, We could look at Bitcoin as well if anyone's interested. Let's pull up the indices here. We could look at the NASDAQ. Okay, NASDAQ pulled down quite a bit this week. If we go to the 1 hour candles, we can see that there's a bit of a support level then down here. Okay, hit and went up, hit and went up. So if you're bullish on the markets and you're looking for an opportunistic spot for a pending order, if you think these elections will end up creating momentum, because a lot of times what the markets don't like is indecision. And once there's a clear winner in the US elections, I think that indecision disappears, and that in and of itself, then knowing the results can create confidence in the markets. And like I said, no matter who wins, there's probably more stimulus coming. And so pending order, an opportunistic spot to buy on the NASDAQ could be down here, okay, 12,600 or so. If NASDAQ pulls back down, that could be a spot to buy. And perhaps the markets start to sell back down now. And if you wanted to take a shot at a sell on an index like NASDAQ, okay, if we take a sell as a market sell, then it makes sense to put your stop loss above this high point. And so maybe 12,800, that gets you above this. If we look at this line here, this is an old support level right here. That's why this was drawn here. So we see support, 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 and then it took a lot of momentum to break below that support level. And you saw the result, it just kept dropping. So if you put your stop loss above this old support, this should be resistance now, then your stop loss up here keeps you safe as long as it doesn't break back above this old support level for your sell position to have a chance to win. Okay, so I can put my take profit then down here. Take profit just before the support level. Stop loss just above the resistance. And you see, if you just click on your entry price and drag, it creates the stop loss line for you, and you can just drag it to where you want it. Same with the take profit. Okay. So we're taking a look at potential opportunity here for a pullback. Then you could prepare a buy from down here. If the movement does get down in this area, you could buy from, say, 12,620, I should say. So we can prepare a buy limit on NASDAQ. And why am I trading in one direction and preparing a trade in the opposite direction? Because that's what the market did today. The market was choppy all day, up and down. The futures were red, the futures were green. I started out telling you that. They changed direction 4 or 5 times today. All the major assets pretty much. And so there's no reason why this couldn't drop. It might not, but it certainly could drop back down. We see the markets went up and down, up, and now here they come down maybe. So then if it does come down, perhaps it bounces back up again following the pattern we've seen throughout the day today. So selling on NASDAQ looks like it's trying to drop for us. Preparing to buy on NASDAQ if it gets to 12,620. Okay, stop loss then would be just below the support down here at 12,000, maybe 580. Just as a simulation for potential moves based on the fundamental news today, that there's choppy trading up and down. The movements have not been sustained in one direction for very long, trying to take advantage of the support and resistance levels that we see on the chart. Okay, Bitcoin. Then we'll do GBP, JPY. I'm going by requests. That's why I'm reading those instrument names out. So let's find Bitcoin. Maybe I have it up at the top. There's Crypto 10. Here we are, Bitcoin. All right, so Bitcoin's been on a tear of late, reaching as high as 34,800 or so, and now it's in another uptrend again. So I see a resistance level on Bitcoin right here. Okay, you see the resistance right there. All right, since today's been choppy, up back down. Up, it's reaching a resistance point, so why not? There we go. Market sell, I don't have to risk much. 33,300 or so gets me above the resistance. Okay, there. If it breaks the resistance, I'm out. Limited risk. Take the trade size that makes sense for your account, obviously. And then your take profit could be, okay, somewhere near, it depends. If you're scalping, here's my first support level right here. Okay, that's my first support level because that's a resistance level here that dropped, then it broke above, and now we're above it again. So this is the first price level because there was a little bit of resistance with this drop that I could see to take profit if you're scalping. If you're in it more long term, you could have your take profit down here somewhere on this support level. Okay, down around 30,400. There's a more major support level down here. We'll leave it at the first support there. And still that's about 2.5, 3 times the potential profit compared to what I'm risking. Okay, so you don't have to risk much to trade on something like Bitcoin. You just have to have the proper trade size, have enough for the margin requirements, and things can work out. The cryptocurrencies in general tend to be very good for technical analysis trading. Why? Because they're not tied to one country. So a lot of people are trading based on the technicals. And so this resistance level seems to be holding up for now. And that could work out quite well, trading off that resistance. And you didn't have to make this trade. It's just an example of how to find the price levels with a cryptocurrency and see how they react. And you see it already reacted. It could go up and test it some more. It could break it. But we've seen very nice reversals off resistance levels like that, or support levels. If you look down here, look at how it bounced off this support. It was here and went up. Look, it hit the same spot, went flying up again. So if you limit your risk, you can go after some really nice profits. GBP, JPY, let's have a look. That was requested. There it is. Okay, GBP, JPY. Technically speaking, we see a support level down here on the 4-hour candles. Okay, so support and up, support again, and bounced up. Okay, so in the bigger picture, if you're a longer term trader, right? We see Bitcoin moved into profit for us a little bit already. We'll see if that keeps going. I don't want to close it with $20 profit. Let's see what we can, if it can get towards our take profit mark that we program. Now, we see a gap here. This was an old gap and that acted as support. Okay, that happens many times. If you look back at the price movements of an instrument, you see a gap. The top of the gap acts as support. If it breaks it, it tends to fill the gap, and then the bottom of the gap would be the next support level. So we've got a support level here. If it breaks below here, I would have stop losses somewhere below that support level. If I'm buying long term, I don't have to wait, right? If I'm a longer term trader, I can buy now, put my stop loss down here below that support, and put my take profit up here where we've established twice recently that the pound can get to. Okay, so longer term move up. Shorter term move, this could drop to that support level, right? So if I'm scalping, I'm probably selling right now on GBP yen, probably selling. If I'm a longer term, and you see it dropping, it's trying to push to this support level. If I'm a longer term trader, I'm not worried about this short movement that I think will probably drop right now. I'm looking more at the longer term implication of climbing much further. Okay. Type okay if you're still hearing me. I have one attendee saying that they lost sound. Okay, great. So it's just the one person. Thank you. I'll let Niall know. It is just you. Okay. So we'll keep going. So it looks like short-term move, downtrend towards this line down here where we put the support level. You could put your stop loss above this resistance, and it looks like you could have a good shot at that. And it looks like it's coming to fruition as we watch. Now, like I said, longer term move, prognosis with the Brexit deal looking like it's working out, and maybe the pandemic starts to get under better control. The yen would naturally weaken in that circumstance, and the pound could easily strengthen. So could do two moves at once. A smaller trade with a stop loss down here with a longer term prognosis to climb, and a shorter term move, maybe a little larger trade with a short stop loss and a quicker take profit down. Okay. All right. Any other questions? I'm not sure what you mean, Modise, where to type on the screen. If you mean the chat box, you should see a chat box there that you can utilize without too much searching involved. We have time. We could look at one more instrument. Any requests here? Okay. I don't personally speak German. We do have a German desk. I could make the suggestion and maybe suggest to your account manager to support. I actually wasn't aware that there aren't any webinars in German, but maybe we could get one going for you if you request. All right, great, everybody. I think we'll stop here. I want you to take a look at these movements. There's a lot of choppy movement up and down. We can see the same thing here. Okay, look at this on the Euro JPY. Up and down, up and down, up and down, up and down for the past days and days. And the same thing's happening now. Down, up, down. So we've got price levels that you might trust right now down here as they've held quite a bit to buy in this case on Euro JPY with your stop loss down. Obviously, it could break. You could have a pending order down here ready to sell. But a lot of choppy movement today to go after for scalping movements, up and down movements. All right, everybody. I think we'll stop here. Thank you for joining. Get your positions in. I think you should get some pending orders ready to go for breakthrough moves. Right now, there's a lot of market opportunities with bounces going off of support levels like we see here, or bounces coming down off resistance levels on other assets. It looks like there's a lot to trade on. All right, everybody. Thank you for joining. Good luck through the election there in the U.S. I think the potential profits are there.